Welcome, everyone. Today I'm going to be talking about part 2 of the Credit and Debt Management Workbook series. The topic is on understanding credit cards. We're going to be talking about something that can either be a powerful tool or a heavy burden credit cards. If you ever felt confused or overwhelmed by credit, you're not alone. This presentation is for you. We'll break down how credit works, how to use it wisely, and how to avoid the traps that keep people stuck in debt, especially when money is tight. Let's get started. In this presentation, we'll look at how credit cards work, how the credit card application process works, the benefits of using credit cards, the differences between credit cards, debit cards, and prepaid cards, how to choose the right credit cards, the risks of credit cards, how to use a credit card in a smart manner, how to master your credit card statement, mastering your credit card and your finances, how to avoid credit card fraud, and what to do if you're a victim of credit card or debt fraud. And then I'll conclude the presentation with the key takeaways. Now I'm going to talk about how credit cards work. Think of a credit card like borrowing a cup of sugar from a neighbor, but instead of sugar, it's money. The card company lends you funds to buy what you need and you pay it back later. Here's the catch. If you don't pay it back later in full by the due date, they charge you extra interest. For example, if you buy groceries for $100 and you pay using your credit card but you don't pay it back on time, that $100 could turn into $120 or more. That's money that you can't afford to lose. Therefore, it's crucial to understand the following financial terms. 1. Short-term loan. This is when you borrow funds from the credit card company to cover your purchases. 2. Monthly statement. This is a statement that lists all your transactions and the total amount outstanding. 3. Grace period. There will be no interest if you pay your credit card bill in full by the deadline. 4. Interest charges. These are high rates that apply if you don't pay your credit card bill in the full amount on time. 5. Credit card issuer. A credit card issuer is a financial institution that provides credit cards to consumers. It sets the credit limit for cardholders and processes payments to merchants for purchases made using its credit cards. 6. Credit limit. Every credit card has a credit limit, which is the most amount that you can charge at once. The credit card provider is typically willing to raise your credit limit when you demonstrate that you are a good credit risk. Now I'm going to talk about the credit card application process. Applying for a credit card is a straightforward process, but it's important to understand each step. Let's walk through the typical credit card application journey. The process begins when you submit your personal and financial information to the credit card issuer. This includes your details like your name, address, income, and employment status. Be sure to provide the accurate information to avoid delays. Next, the credit card issuer will evaluate your creditworthiness. They'll check your credit score and review your payment history and income. This helps them determine how likely you are to repay your debts. Remember, this inquiry may temporarily affect your credit score. If approved, the issuer will assign you a credit limit. New users will typically start with lower limits as the issuer assesses the risk. Your limit may increase over time as you demonstrate responsible credit use. Finally, if you're deemed a good credit risk, your card will be issued. You'll receive the card by mail, usually within 7 to 10 business days. Once activated, you can start using your new credit card responsibly. Now I'm going to talk about the benefits of using credit cards. Credit cards are more than just a payment tool. They offer a range of benefits that can protect your finances, build your credit, and even reward you for everyday spending. Let's explore these advantages in detail. First, credit cards provide strong financial protection. Unlike cash, if your credit card is lost or stolen, You're typically only liable for a small amount, or even nothing, if you report the fraud promptly. Many cards also offered added perks like extended warranties on purchases or coverage for damaged or stolen items. This makes them a safer way to shop both online and in stores. Next, responsible credit card use is one of the easiest ways to build your credit history. Paying your bill on time and keeping your balances low demonstrates reliability to credit card lenders. Over time, this can boost your credit score, which helps you qualify for better rates on loans, mortgages, and even future credit cards. Now let's talk about the fun part, rewards. Many credit cards offer points, miles, or even cashback on purchases. For example, you might earn 2% back on every dollar spent, or get travel perks like free checked bags. Think of it as getting paid to spend wisely. Just remember to pay your balance in full to avoid interest charges. Finally, credit cards offer unmatched convenience. They're essential for online shopping. It also reduces the need to carry cash and consolidate all your purchases into one statement. Plus, features like autopay and mobile wallets make managing payments easier than ever. To recap, credit cards deliver protection, credit building power, rewards, and convenience, but these benefits only work if you use them responsibly. This means paying your bills on time, avoiding overspending, and choosing a credit card that aligns with your goals. Now let's take a look at the differences between credit cards, debit cards, and prepaid cards. Credit cards let you borrow money up to a limit, but they come at risks and rewards. For those rebuilding finances, credit cards can help establish credit history, which is critical for renting apartments or getting loans. But be aware, high interest rates and annual fees can trap you in debt if you don't pay the balance in full. A credit card might be a tool or a trap. It all depends on how you use it. Debit cards use your own money directly from your bank account. They're great for controlling spending, but many banks charge monthly fees or overdraft penalties. An overdraft penalty is a penalty that's charged by banks when you spend more money than you have available in your account, causing your balance to go negative. Prepaid cards are like digital cash. You can load money onto them before you use them. They're handy if you can't get a bank account or a credit card, but watch out. Many charge fees just to activate, reload, or even check your balance. Now I'll talk about choosing the right credit card. Credit cards can either be a lifeline or a trap, especially when every dollar counts. I'm going to break down how to pick a credit card that works for you and not against you, because the right card shouldn't cost more than it gives back. We'll be looking at 4 factors that you should consider when choosing a credit card. The first factor is interest rate. If you're living paycheck to paycheck and you can't always pay your full balance, a high annual percentage rate can turn a $50 charge into $80 fast. So look for cards with the lowest interest rates possible, even if they don't offer flashy rewards, because no perk is worth drowning in debt. The second factor is fees. Fees are like termites. They'll chew through your money quietly. Annual fees might not be worth it. Cash advance fees might be a straight up scam. Foreign transaction fees is brutal if you need to send money to family abroad. Here's the rule. If the fees cost more than the benefits, walk away. The third factor is rewards. Rewards sound great until you realize you're paying for them. A credit card with a 2% cashback, but it comes with a $100 fee? You don't need to spend a $100 fee. You don't even need to spend $5,000 just to break even. For folks scraping by, that math doesn't even add up. Instead, look for no-fee rewards for credit cards that give cash back on essentials like gas or groceries.
The fourth factor is introductory offers. That 0% interest for 12 months offer, it's a test. If you miss a payment or don't pay off the balance in time, and boom, you're hit with retroactive interest. Make sure to read the fine print because your budget might. Now I'm going to be talking about the risks of credit cards. Picture this, you're stretching $20 to last the week when an emergency hits. Your credit card saves you in the moment, but 6 months later, that $100 charge has ballooned to $300. This isn't magic, it's how credit cards keep people trapped in debt. Today we're breaking down the real risks, especially when every dollar counts. First, credit cards can trick our brains that just $20 here and there can add up fast. For people living paycheck to paycheck, a $500 balance can take over 5 years to pay off, especially if you're only making the minimum payments. Meanwhile, you end up paying more in interest than the original debt itself. This is the minimum payment trap where you're working just to cover the interest but not the actual balance. Most credit cards charge between 15 to 29% interest. That's 3 to 5 times higher than personal loans. Here's what that really means. A $1,000 medical bill, if paid off slowly, can turn into a $1,500 or more. If you're only making the minimum payments, you might never pay it off at all. And guess who gets the worst interest rates? The people already struggling financially. One late payment can tank your credit score by over 100 points. That can mean higher security deposits for your apartments, being denied job opportunities, and yes, some employers check your credit scores, and even paying for more for car insurance. When you're already struggling to make rent, a damaged credit score can lock you out of your basic needs. Banks also make billions off fees where you don't see coming. A $35 over limit fee when you're already broke, or a $25 late fee because your paycheck arrived late. A $5 monthly fee just for having the credit card. These aren't just small charges. This is money that could have been used for your groceries, your bus fare, and other essentials. Next time you get a credit card offer, don't just skim it. Play the detective role. Search for the word fee. Calculate how many work hours each fee could cost you. And most importantly, ask yourself, is this helping or hurting my situation? Now let's talk about how to use your credit card in a smart manner. Let's be real, when you're living paycheck to paycheck, credit cards can feel like a lifeline. But if you're not careful, they can turn into a trap that keeps you struggling even harder. So how do you use them smartly without getting buried in debt? Let's break it down. First, pay in full if you can. I know it sounds impossible when money's tight, but here's the deal. Credit card companies make their money off people who carry a balance. If you pay off what you spend each month, you can avoid the interest completely. Even if you can't pay it at all, paying as much as possible saves you big time. Secondly, track your spending. Ever checked your bank account and thought, wait, where did my money go? Credit cards can make spending too easy, and those little charges can add up fast. Take a few minutes each week to check your statements. Seeing those numbers in black and white, that's a reality check that can help you stay within your budget. Third, pay on time, every time. Late fees are a scam against people who are already struggling. Set up automated payments, even if it's just the minimum, so you don't get hit with extra charges. A $25 late fee might not seem like much, but that's a week of groceries or a bus fare gone, just like that. And finally, read the fine print. Credit card companies are sneaky. They'll hit you with hidden fees, raise your interest rates, and trap you in debt if you're not careful. So before signing up for a new credit card, search for words like fee and penalty, and ask yourself, how much is this going to really cost me? The more you know, the harder it is for them to take advantage of you. The bottom line? Use credit cards as a tool, not a crutch. The goal is to survive today without making tomorrow harder. Stay informed, stay in control, and make those credit cards work for you. not the other way around. Now let's talk about mastering your credit card statement. Your credit card statement holds important details that help you stay in control of your finances. Here's what to check every month on your statement. First off, we have the statement date, which marks the end of your billing cycle and the start of a new one. Then, we have a payment due date, which is the deadline to pay your bill and avoid late fees. The third component is the credit limit, which is the total amount that you can borrow on your card. The fourth component is the credit available, which is how much credit remains after deducting your balance and new charges. The fifth component is the minimum payment, which is the lowest amount you must pay to keep your account in good standing. The sixth component is the new balance, which is your previous balance plus new charges minus any payments. The seventh component is the annual percentage rate, which is the interest rate applied to any unpaid balance. Here's a tip. Make sure to regularly review your statement to catch errors, avoid unnecessary fees, and manage your spending wisely. For more information, you can visit the website on the slide for more guidance on how to read your credit card statement. Now let's talk about how you can master your credit card and your finances. A credit card could either be your best friend or your worst enemy. It all comes down to how you use it. So let's break it down, quick and simple. First off, pay in full every month. You know what's worse than a bill? A bill that keeps growing. If you don't pay your full balance, interest charges pile up, and suddenly you're paying way more than you ever spent. If you can, clear that balance every month. If that's not possible, keep your credit limit low so you don't overspend in the first place. 2. Pay more than the minimum. Minimum payments seem like a lifesaver, but they're actually a trap. Paying just the minimum keeps you in debt longer and makes the bank richer, not you. Even if you throw in an extra $10 or $20, do it. Every little bit helps chip away at that balance. 3. Seek lower interest rates. If you carry a balance, high interest can eat you alive. Look for a credit card with a lower annual percentage rate, or if your debt is stacking up, consider a balance transfer to a line of credit with a better rate. Less interest means more of your money actually goes towards paying off what you owe. Pay on time every time. Late payments, not only do they come with fees, but they also tank your credit score. Set up automated payments or pay a few days early to avoid getting hit with extra charges. Limit your cash advances. Cash advances seem like a quick fix, but they're actually a huge ripoff. The second you take one, interest starts piling up, and it's usually way higher than your normal rate. Only use them if it's absolutely necessary and pay them off fast. Consolidate your credit cards. Having too many credit cards can be dangerous. The more you have, the easier it is to overspend. Keep it simple. Stick to your essentials and avoid maxing out your credit limits. Maximize your perks. Your credit card isn't just for spending. It probably comes with perks you're not even using. Travel insurance, extended warranties, cashback rewards. Take advantage of those. If you're paying for a card, make sure you're getting your money's worth. A credit card is just a tool. Using it wisely can help you build credit, manage your expenses, and even save money. But if you use it recklessly, it can put you in a financial hole. Now I'm going to be talking about ways that you could use to avoid credit card fraud. 1. Protect your information like your food stamp card. You wouldn't leave your electronic benefit transfer card lying around, right? Treat your debit and credit card information the same way. Scammers love stealing mail from low-income neighborhoods, especially pre-approved credit offers. Before you toss mail with your name on it, shred it, or at least rip it up real good. 2. Your PIN isn't for sharing. Your PIN is like your stash spot. Nobody should know it but you. Never use your birthday or 123 as your PIN. Try using something that you'll remember, like the year of your favorite song or your old house number, and never write it down. 3. Sketchy ATMs can rob you. That rundown ATM at the liquor store, it could be rigged to steal your credit card information. Before you put your credit card in, give the slot a little tug. If it moves, walk away. That $20 withdrawal isn't worth waking up to an empty account. 4. Old credit cards can mean free money for thieves. Keeping an expired credit card just in case is like leaving your front door unlocked all night. If a scammer gets their hands on it, they might find a way to use it. So, cut up the old credit card real good. And don't just slice the strip, cut through the numbers too. 5. If your credit card is late in the mail, assume the worst. If your new card hasn't shown up when it's supposed to, don't wait. Call your bank as soon as possible. Someone could have stolen it, or by the time you notice, they might have already maxed out that credit card. A quick call can save you months of fighting to get your money back. 6. Emails that ask for your information are considered straight up scams. That email saying that your account is locked, that's fake. Your bank will never ask for your information through email. If you get a message like that, delete it and call your bank directly. If you fall for it, your information could be sold on the dark web and scammers can even drain your money before you even notice. 7. If a website ain't secure, it's a setup. 8. Your mailbox is an open invitation for thieves. A locked mailbox costs way less than losing your paycheck. If you're going out of town, put a hold on your mail. Stolen checks and benefit payments are a scammer's dream, and they hit the low-income areas the hardest.
Now let's talk about what you should do if you're a victim of debt or credit card fraud. Here are the steps that you should take. First, you should report lost or stolen cards or unauthorized charges immediately. Contact your credit card issuer right away to prevent further issues. You can also file a police report and document all the details of the fraud. In addition, you can report the fraud to the Canadian Anti-Fraud Centre by calling 1-888-495-8501, or you can visit their website. The Financial Consumer Agency of Canada ensures that financial institutions protect consumers like you. And you can also check with your credit card provider, as many of them offer fraud protection programs that help you recover. Now I'm going to be talking about the key takeaways of this presentation. Credit cards can be useful financial tools, but if misused, they can lead to serious debt. Understanding the key aspects of credit card management is essential, especially for individuals facing financial hardship. First, it's important to understand the terms. Always read the terms and conditions before signing up for new credit cards. Pay attention to interest rates, annual fees, late payment fees, and due dates. Higher interest rates can mean carrying a balance that could lead to significant debt over time. 2. Compare different credit cards. Look for low interest rates, no annual fees, and cashback or rewards that can match your spending habits. Avoid credit cards with high fees or penalties that could worsen your financial struggles. Some credit cards offer better protection against fraud and unauthorized transactions. 3. Borrow only what you can afford to repay. A credit card is not free money. It's a loan that must be repaid. Only charge what you can pay off in full each month to avoid interest charges. Overspending can quickly lead to a cycle of debt, especially for individuals living paycheck to paycheck. 4. Pay your bills on time and in full. Late payments can result in extra fees and higher interest charges. Paying only the minimum can only trap you in the long-term debt due to accumulating interest. Timely payments can also improve your credit score, which is crucial for future financial opportunities. 5. Regularly review your statements. Check your statements for errors or unauthorized transactions. Fraudulent charges can drain your funds if not reported promptly. Many banks offer mobile alerts for every transaction to help monitor activity. 6. Take precautions against credit card fraud. Never share your credit card details with unknown sources. Use secure websites when making online purchases, and enable alerts and set strong passwords to protect against identity theft. Credit cards can provide financial flexibility when used wisely. Understanding the terms, borrowing responsibly, and staying vigilant against fraud can prevent financial hardship and help build a secure financial future. Now here's a credit card knowledge pop quiz. The first question is, what is the main advantage of paying your credit card balance in full every month? Is it option A, it increases your credit limit automatically? Option B, it helps you avoid interest charges? Option C, it reduces your minimum payment requirement? Option D, it allows you to skip your payments? Question 2 is, which of the following is a risk of using credit cards? Is it option A, they help you build a credit history? Option B, they offer fraud protection? Option C, they may lead to high interest debt accumulation? Or is it option D, they always come with 0 annual fees? Question 3 is, what should you do if you suspect unauthorized activity on your credit card? Is it option A, wait until the next statement to check if it appears again? Option B, share your credit card details with your bank via email? Option C, immediately report it to your credit card issuer? Or option D, change your PIN and continue using the card as usual? Please take a few minutes, pause the video, and answer the questions. When you think you have the answers, unpause the video and I'll show you the answers. So here are the solutions. The solution for question 1 was option B. It helps you avoid interest charges. Paying in full prevents interest from accumulating, saving money in the long run. The answer for question 2 was option C. They may lead to high-risk debt accumulation. High interest rates can cause debt to grow quickly if the balances aren't paid off. The answer for question 3 was C. Immediately report it to your credit card issuer. Reporting fraud right away protects your account and prevents further issues. A smart tip is to regularly check your statements and use your secure payment methods. Thank you for listening to this presentation.